Bank of Canada came out swinging today, increasing its policy interest rate for the seventh time this year, this time by 50 basis points. So we're going to dive into the press release from the Bank of Canada. We're going to talk about how that's affected mortgages. And then to wrap up, I'm going to go through my Durham Regional Real Estate update for November 2022. Hello, everybody. It's me, Robert Marsiglio, sales representative with Keller Williams, Referred Urban, based out here in Durham Region, but covering all of the GTA for you each and every single week. As I said, this week, the big news is that the Bank of Canada increased their policy interest rate by 50 basis points. And I want to get right into what that means for you. Kicking things off with the press release. The Bank of Canada today increased its target for the overnight rate to 4.25%. The bank is also continuing its policy of quantitative tightening. Inflation around the world remains high and broadly based. Global economic growth is slowing, although it is proving more resilient than was expected at the time of the October monetary policy report. The gradual easing of global supply bottlenecks continue, although further progress could be disrupted by geopolitical events. In Canada, GDP growth in the third quarter was stronger than expected, and the economy continued to operate in excess demand. Canada's labour market remains tight, with unemployment near historic lows. While commodity exports have been strong, there is growing evidence that tighter monetary policy is restraining domestic demand. Consumption moderated in the third quarter, and housing market activity continues to decline. The data since the October MPR support the bank's outlook that growth will essentially stall through the end of this year and the first half of next year. CPI inflation remained at 6.9% in October, with many of the goods and services Canadians regularly buy showing large price increases. Measures of core inflation remain around 5%. 3-month rates of change in the core inflation have come down, an early indicator that price pressures may be losing momentum. However, inflation is still too high, and short-term inflation expectations remain elevated. The longer that consumers and businesses expect inflation to be above the target, the greater the risk that elevated inflation becomes entrenched. Looking ahead, Governing Council will be considering whether the policy interest rate needs to rise further to bring supply and demand back into balance and return inflation to target. Governing Council continues to assess how tighter monetary policy is working to slow demand, how supply challenges are resolving, and how inflation and inflation expectations are responding. Quantitative tightening is complementing increases in the policy rate. We are resolute in our commitment to achieving the 2% inflation target and restoring price stability for Canadians. So it looks like what we are seeing is some indicators that price pressures are loosening, but the Bank of Canada not wanting to back off too quickly, have inflation come roaring back, then have to go through another rate hiking cycle all over again. They want to kind of step on it the first time, nip it in the bud, if you will. Going back to that Reuters article we discussed last video, the markets were pricing in 25 basis points for this rate hike. Whereas those economists that were polled said 50 was more likely. It looks like the economists won out, and probably for a good reason. The next big announcement will be January 25th. And not only do we get a rate announcement at that time, we also get the new and updated monetary policy report. So again, that's January 25th, 2023. I asked the question in the last video, and I want to ask again now that this rate announcement has happened. Do you think this 50 basis points is the end of it? Do you think we will see more in the new year? Let me know in the comments below, where are rates going to go in early 2023? How did this announcement affect the mortgage side of things? We know that mortgage rates are most tied to this overnight rate in the real estate industry. So let's take a look. So that 50 basis point hike is going to affect the 5-year variable rate in this column. And as you can see, that's going to bring everybody, at least from these big 5 banks, up into 6% range for 5-year variable products. They were already in excess of this 5-year fixed product, and that spread is just going to get bigger after this announcement. Those are not the only rates we are playing with, though, and as Ron Butler kind of highlighted in a thread on Twitter shortly after the announcement, here are kind of some of the updates as part of that thread. So the new bank prime rate is 4.25%, which means that the retail bank prime rate is being increased to 6.45%. A HELOC, the average rate is going to be 6.95%. Lows for variable rates are going to be 5.45%, and the new median variable rate is 5.95%. The reason I want to highlight what Ron is saying here is that don't just blindly go and sign up for whatever a bank is offering you if you are in a position where you need to refinance or you are out shopping for a mortgage product to get into the market. Mortgage brokers may have access to different products that could fit your needs, that may be a bit better rates than what the banks are offering at the same time. Now that we are all caught up on the rate announcement and what is going to be happening with mortgage rates going forward, this is where I'm going to hop into my Durham Region recap for at least Pickering, Ajax, Whitby, and Oshawa, and what happened in November of 2022. Kind of where is the market at right now east of Toronto. Here we go, kicking things off with our detached median sale prices across these markets. So Pickering, just over 1.1 million. Ajax, right around the $1 million mark. Whitby, just over $1 million for a detached home. And Oshawa, just under $790,000. And you can see where things trended from the month prior. Everybody's detached median sale price came down just a little bit. And if you go back to this column, which is November, you can see everybody is well below kind of year over year in sale prices. And here's a graphic illustration of just exactly that. So this is the Durham detached median sale price percent change, and that's year over year. So you can see everybody is down anywhere between kind of 13.4% in Ajax to 16.2% in Pickering, whereas everybody was up earlier in the year by as much as, 45, 44% in Ajax and Whitby. And going forward, I think we are just going to see these numbers decrease more. And the reason why is because you can see, with the exception of Pickering, that's a bit of a dip. And this is probably just due to low sales volumes and then a pickup into the new year. Everybody's median price points started really ramping up from November to December, December to January, and then into February. So this is where we talk about the base effect. And as this number gets higher and we keep tailing off in prices, the spread is just going to get bigger and bigger. So don't be surprised to see readings of, 20, 25, maybe even 30% year over year change at some point in median price points. How about sales for the month of November? So comparing this month to last, Pickering saw a few more sales than last month in November, but everybody else was down. Ajax by 6 sales, Whitby by 23 sales, and doing the quick maths, Oshawa by 27 sales on the freehold side. How long was it taking for these properties to sell in November? So this is all of Durham Region. You can see the average property days on market, as we talked about, was 26. Listings were taking 17 days to sell, but the property from the first time it was listed till it actually sold was taking 26 days on average. And here you can see Ajax 24, Brock 47, Clarington 27, Oshawa 22, Pickering 29, Scugog 28, Uxbridge 42, and Whitby 24. In terms of our freehold listings, Pickering came in pretty even, 106 this month versus 101 last month, but everybody else had a pretty significant slowdown in terms of listing activity from October into November. In terms of our active inventory, everybody's inventory just dropping off into the last month of 2022 and into the new year. Into our smaller, more volatile markets, we'll call them, median prices for townhomes across the board, Pickering at just less than $760,000, Ajax just over $800,000, Whitby at $815,000, and Oshawa at $725,000. You can see how that compared to the month before and how we've trended over the past 13 months. Semis, again, same thing, pretty volatile. Pickering just over $800,000, Ajax $870,000, Whitby $820,000, and Oshawa $702,000 for the month of November. And we'll wrap it up with our condos. $645,000 in Pickering, $533,005 in Ajax, $710,000 in Whitby, $540,000 in Oshawa. And condo sales. So you can see small sample sizes are going to cause the numbers on the previous slide to fluctuate a lot. Oshawa coming in with the most condo sales at 19. That is not a big enough number to really determine what is going on in the market, which is why it's really important to study comparables in your complex, in your building specifically. Get in touch with somebody who knows how to do that for you. So make sure to keep tuning back in weekly for these Durham region recaps. If you stuck with me to this point in the video, I'm assuming that's information that's pretty important to you. I'll keep an eye on that active inventory number for you, which is going to really determine how much are things slowing down as we go into the holiday season here. Let me know in the comments one more time. Do you want to see information for places like Clarington, Brock, Scugog, Uxbridge as well? I can include those in next week's video. Thanks so much for sticking it out with me to this point in the video. I look forward to speaking with you again in 1 week's time. And until then, stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.